How is it that some companies can take advantage of business losses? When you have a business loss, that means that your income is less than their expenses, so you have negative income. Basically, you made a loss. Fine, so you're not paying taxes. Okay, but how is this an advantage? You made zero income, so you're not paying taxes, but you made zero income. The advantage is that there's a rule called Tax Loss Carryforward, which means basically that the losses in the current year, you can set them against future profits. And so we'll go over some of the details of this rule, how the rule has changed in the past 5 years, and how does it affect companies, and some examples. So prior to 2018, tax year 2018, companies were able to take the loss of the current years and set it against the profits in the past 2 years, and against future profits for the next 20 years. So if I have $1 million of loss in this year, I could set it against, let's say, $100,000 of profits from last year and then the year prior to that. And if my loss is big enough, I could also set it against profit for the next 20 years. However, under the Tax Cuts and Jobs Act in 2018, the rule has changed. So now companies are not allowed to go backwards. So the loss that I make this year, I can set it against future years. And the rule has been changed that instead of the 20 years limitation that was previously set, which is like crazy long, now it's even longer. It's indefinitely. So indefinitely, you can carry that loss against future profit. However, one limitation that has been changed is instead of the 100% against the net income that you make in future profits, every year you cannot offset against more than 80% of your income. So if you have a loss this year, so let's say next year, if you have $1,000 of profit, only 80% of that, which is $800, would be able to be offset against the loss from current year. So that's the one limitation that has changed. Now, originally, this rule has been set to kind of help companies that have fluctuating income levels like farms and so on. One year, the crops, they might not be making money from these crops, and then next year they'll be making money. So just to kind of even out the taxation and the amount of tax due. So they made this rule, but that rule is not really used mainly for farms. It's really used by all kinds of big corporations, big companies, and so on. It has been really taken advantage by a lot of wealthy companies. Who can take advantage of it? Individuals, C corporations, estates, trusts, insurance companies. Individuals, when we mean individuals, we mean sole proprietor businesses. So not you on your taxes. You can't just carry forward that rule that, let's say you spend all your income, you're not going to be able to deduct it. You're not going to make a loss out of that. But you're not allowed to take advantage of that rule if you're a partnership, S corporation. That rule has also included situations where companies want to acquire companies that have net loss carry forward on their books, because now if you acquire a company, it's part of your company, you can take advantage of some of these losses against some of the profits. Now, there are some limitations that IRS put in place to prevent companies of doing that, but it's not completely disallowed. So companies can still take advantage of the loss carry forward from the acquired companies. Let's go through a simple example. In 2022, in current year, you made a loss of $1 million. You're not paying any tax because you made zero in income. In 2023, let's say next year, you made an income of $700,000. Now you have $1 million of loss carry forward that you can carry against that income. However, there's a limitation that only up to 80% of the $700,000 can be offset against your carry forward loss. So $560,000 can be offset, so that's subtracted from $700,000. So only up to $140,000 is actually taxed with the corporation tax rate of 21% right now. So if you had to pay tax on the entire $700,000, it would be $147,000. However, you're only paying tax on the $140,000, which is $29,000. That means you have tax saving of $117,600. So you can see how much it's saving you in taxes by using the carry forward rule. Now here's a more complicated example. We have a situation where our income is zero, we have expense of $1 million, net income means negative $1 million. We didn't have any carry forward from prior year. The current loss is $1 million, so the subtotal is $1 million. So we have 0% tax. Now let's say next year, again, maybe it's a startup, there's no more income, there's some expenses, but a little bit fewer expenses. So there's also $500,000 of negative income. So now we have a carry forward from prior year of $1,000, then current $500,000. So to total carry forward, so you can see it accumulates every year. You can add the carry forward. So it's $1,500,000 of carry forward that you can carry towards next year. So let's see what happens in the following year. So in 2024, the first year when you actually don't have a loss, your income and expenses are equal. So you have zero income, but you have zero loss. In that case, we still have $1,500,000 carry forward, but we can't set it against any income, zero tax due, but zero changes in our carry forward. Then let's say what happens in 2025. That's the first year you're actually making some income. You're making $700,000 in income. You have the $1,500,000 of carry forward from all these 3 years. So what you can do, you can actually offset some of it against your net income. However, you have a limitation that only 80% of that income can be offset, which is $560,000. So you can deduct $560,000, $140,000 will be taxed at 21% tax rate, which is $29,400. But you still have $940,000 left to carry forward to next year. And let's say in 2026, you actually made some more money, $1,700,000. Now you still have $940,000 that you were carrying forward the loss from prior years, so you can offset some of it. Now 80%, the limitation that we talked about, you can offset up to 80% of this income, which would be $1,360,000, which is way more than the $940,000 carry forward. Therefore, you can offset the entire $940,000 against your income. Therefore, you cleared up your carry forward, so you have no more carry forward loss that you can carry forward. So you still have to pay taxes on the $760,000 instead of the $1,700,000, which adds up to $159,600. So I hope you enjoyed this video. I will put some links to the tax loss carry forward definition and information from Investopedia so you can learn more about it. And thanks so much for watching.